The topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome and good morning, America. It's always great to be here. We start out Mondays here at 10 o'clock Eastern time, getting to talk about, taxes, bookkeeping, tax relief, things that are important to everybody. This show, we're going to talk about S-Corps, the good, the bad, and the ugly. But first, we had a lot of questions about per diems, especially per diems for truck drivers. And this becomes a very hot topic for truckers out there. And when I'm talking at OOIDA Truck to Success Seminar, we get into talking about trucker per diems. And sometimes when you're doing your taxes with somebody that doesn't know truckers, they don't know or don't think about per diems for you as a truck driver. Now, if you're a W-2 driver, it's really up to the company that you're working for if they're going to pay you per diems. The bad side, if the company's paying you per diems and on your paycheck, is the per diems are not taxable, so they're not included in your income. So if you ever go to get loans and stuff, your income will look a lot lower because they're paying you per diems. It usually offsets what they're paying you with taxable income. But if you're an over-the-road driver, owner, operator, per diems are going to be for you. And it's per publication IRS 463, travel, entertainment, gift, and car expenses. It allows for standard meal and incidental expense deduction for you as an owner-operator. Now, these per diems did have a rate change. And so from January through September, you were allowed to take a deduction of $69 per day. Now that's $69 for the middle days, but you get half of that for the first day and half for the last day. And then October 1st, it changed to $80 per day. Again, you get half for the first day, half for the last day, but all the days in between, you would get the 80. So you've got to make sure you're getting this deduction and you're getting it right. So that per diem change, again, was October 1st. So you're going to use that lower rate of $69 through September 30th, and then the $80 rate after October through December and currently through 2025. Now, how do you determine? You got to look at days on the road, days you're away from home. So when's the first day you left on the trip? When's the last day you came back, and the days in between? And so you'll have to count that. You can use your ELD to come up with those numbers. You can use your logbook. You can use a calendar, but you got to keep track of it. So you got to have the evidence and you got to have the proof that you're out there and you're on the road and away from home. Now, to qualify, IRS established specific criteria for transportation workers to claim the standard meal and incidental expenses. Of course, you got to be employed in the transportation industry or be an owner operator in the transportation industry, over the road driver. You're not doing local deliveries because you're not going to be away from home. You're going to return home. And of course, transportation industry, IRS says your job must be directly involved moving goods or people by truck, train, bus, ship, airplane, barge. So at least they lay down, hey, every way of transporting goods or people. IRS qualifications. This is kind of the big one. You must have a tax home, and you're required to incur expenses to maintain the home while you're on the road. So if you don't have a tax home, you consider living in a tax turtle. You're taking your home with you, just like a turtle does in his shell. But if you have a home that you actually maintain and pay for the expenses, a husband and wife, your wife could be maintaining the home and paying part of the expenses and everything. That's fine. But you've got to have something you're maintaining for your home. Now, these per diems are only 80% deductible for 2024, 2025. You have to be able to track your travel. So don't think you can just guesstimate. Yeah, I've had clients guesstimate quite a bit. And so we're asking, hey, fill out this form. How many nights have you been on the road away from home? And when they report 385 nights, man, there's something wrong. There's only 365 days in a year. So come on, be realistic. If you're on the road 365 days in the year, you probably never went home. And you should be making a ton of money. But that being said, you got to make sure you're counting those days, because I can almost guarantee that IRS is going to audit if you're reporting 365 days that you're going to be on the road. They're going to say you never went home, you don't have a tax home, you never had a place where you laid your head down besides the truck. So, kind of remember that out there. Again, W-2 employees, this is not a deduction for you. Yes, years ago, before the Trump tax code, you used to file Form 2106 and take these per diems and reduce your W-2 salary down. But we can't do that anymore. Some employers, again, will pay you these per diems, but it's something you've got to talk to your employer about before you get hired. And the per diem is not going to be higher than the federal per diem rate. You still, as an employee, are going to have to approve time, dates, places, and other business purposes. So you're going to have some of the same requirements out there, but your employer is going to be paying that and usually going to reduce your gross wages, which reduces what's paid for Social Security and Medicare tax, which is going to reduce future Social Security and Medicare benefits. It also reduces what people see when you go to get loans, because it reduces your pay. And it's the same effect that it has for an owner operator out there as a sole proprietorship. It's reducing your income down. And S-Corps, LLCs, it's going to be reducing that income down. So when you go to get a loan, sometimes the income doesn't seem as high as it is. You're going to have to explain to them that you're able to take these per diems for travel, meals, and incidental expenses. And it's usually higher than the actual out-of-pocket. So, keep that in mind as you're possibly going through loans and trying to figure out, hey, what do I need to do when I'm taking, per diems that are out there? So the real fun part is, we get to talk about these things as at the Owner Operators Independent Drivers Association, OOIDA's Truck to Success seminar. So if you're a member of OOIDA, or maybe you're a W-2 driver and you're looking to get out to be an owner operator and be out there on your own, Truck to Success seminar is a really good seminar that the OOIDA Foundation puts on. usually in October of every year. They haven't given the schedule yet for this year's, but it's a great seminar, great opportunity when I'm out there to be able to sit down and talk with truckers and hear a little bit more firsthand what's happening out there on the road, what things are impacting owner operators out there. Besides talking to the clients at Trucker Tax Tools, we get a great insight of what's happening. Now, hey, you may go to that seminar and decide, hey, being an owner operator isn't right for me and I just want to stay W-2 driver. Hey, that's great too. It's valuable to learn. And that's something that you would learn in that seminar as well, because of everything that OIDA staff goes through, from getting your own authority, lease purchase, insurance, medical requirements, all those fun things that you get to do as a owner operator. So if you're looking for some help with your bookkeeping and your taxes and per diems, go to truckertaxtools.com. We have solutions built just for you. We have a great new base plan that starts at just $25 a week for bookkeeping. You're not going to beat that anywhere. So go to truckertaxtools.com or give us a call at 877-966-2477. Again, 877-966-2477. Give us a call. Let us talk about your bookkeeping. Let's talk about your taxes. Let's talk about your per diems and how we can go about, saving you more money on your taxes as being an owner operator. Hey, we promised today we were talking about S-Corps, the good, the bad, the ugly of being an S-Corp. And then we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for you. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Welcome back. This year is just kind of moving fast. Here we are, the last Monday of February. Just can't believe that we're this far into the year. And, we're talking about S-Corps, the good, the bad, the ugly of being an S-Corp and making the election for S-Corp. And speaking of making the election for S-Corp, you only have until March 15th to make the election to be taxed as an S-Corp for 2025. So sometimes this is really critical to make this decision. Should I be? Shouldn't I be? What are the reasons? What are the pros? What are the cons? What is an S-Corp? We don't know. That's what people say. We don't know. Well, an S-Corp is a designation by the U.S. tax code for small businesses. So whether you're an LLC, whether you're an Inc., whether you're a LLP, you can make the election to be taxed as an S-Corp. Now, this isn't an election that you make when you set up your company with your Secretary of State in your state. So when you go to the Secretary of State, you decide, hey, I'm going to be a LLC, limited liability company, or I'm going to be an Inc., or I'm going to be a limited liability partnership. And then once you get that designation and you get your employer identification number, then you would have to go back to the IRS and make the election through the U.S. Department of Treasury to be taxed as a S-Corp. There's rules and regulations. Hey, you know, one of the things I hate the most, and and a lot of times we service the trucking industry at Trucker Tax Tools, but servicing many other industries and companies around the nation with tax relief, we see where people have had, let's say, truck stop bookkeeping or coffee shop bookkeeping or taxes. And all that means is that you're at a coffee shop, you're at a truck stop, and somebody starts telling you that, hey, I'm an S-Corp and I'm saving a bunch of money, or hey, I became an LLC and saving a bunch of money. So you jump out there and just do things and you don't get advice. Get advice. Whether you're here at Tax Talk for You, by the way, subscribe at taxtalk4you.com so you never miss an episode. But when you're taking advice from somebody at the fuel pump, they don't always get it right. So, when you form your LLC and think somebody at the truck stop said, hey, you can do this because it's going to save you money on your taxes. And you just go and do it, but you have no clue what you're doing. And they tell you things that aren't right about this. So get advice. And that's why you're here. Get advice. So again, S-Corp. It is a designation by the U.S. tax code for small businesses. Again, you got to make the election. So when you see Inc. or LLC at the end of the business name, it's not for show. It's a corporation. It signifies that a business is essentially a separate entity from the owners, separate from you. So what's the right way to structure your business? Go back and listen to one of the other podcasts at Tax Talk for You, and you can hear all the difference between the LLC, S-Corp, LLP, the different types of entities. But the main purpose at the end of the day sometimes is to limit your liability. Sometimes it's putting the structure together to limit your taxes. So choosing that structure and then choosing how to be taxed. So choosing whether I should be taxed as an S-Corp or as a single member LLC on Schedule C or an Inc. are tax decisions. So if your business is an LLC or an Inc., you'll typically enjoy that limited liability, which means the company, not the people who own it, the shareholders, partners, or investors are not going to be held legally liable for the debts of the company unless you sign as a co-signer, which a lot of times you got to do. I do tell you, consult an attorney for more information on liability and liability protection within your corporation. However, if you're an owner operator and you're out there driving and you have an S-Corp or an LLC and you're the driver and something happens, you're the one getting sued anyway because you were behind the wheel. Just the same as if you had drivers driving for you, you'll be protected if they do something, but they will not be protected because they got into the accident. They were behind the wheel. So there's a couple crucial factors to keep in mind for S-Corp. S-Corp status has limits and requirements on who can own your business. Second, payroll. Of course, paying employees as an employer, you're required to pay Medicare, Social Security, taxes, and on all the wages that you pay. However, this includes wages you pay yourself. And the IRS requires an S-Corp owner be compensated for the work they do. And then they have medical insurance guidelines as well you've got to navigate in this process as well. And you've got to have a reasonable wage, meaning you can't just pay yourself, let's say $10,000 to be the CFO of this business or to be the truck driver of this business. It's got to be reasonable. What are you going to pay somebody else to do the jobs that you do? And the IRS is going to look at that. If you don't pay yourself a wage, but you work in the business, guess what? The IRS is looking for that. So you've got to have that out there as well. So those are the two hurdles you've got to get through. So IRS rules of ownership. So the IRS has fairly strict rules on who can hold ownership in S-Corp. Per the IRS, the rules for electing the status, you got to meet these requirements. And some of them are pretty easy. You can't have more than 100 shareholders. You can only issue one class of stock. Your investors can be individuals as well as certain trusts and estates, according to the IRS. You and your spouse can be considered one shareholder. And the same goes for members of family and their estates. You can't have entities such as partnerships or corporations as an investor. So if somebody else is running an LLC and wants to own the shares through the LLC, you cannot elect S-Corp status. You can also not have a non-resident alien as a shareholder. According to the agency, a person can be considered a resident alien if he or she is not a permanent resident or a U.S. citizen, as long as the individual has been in the United States for at least 31 days in the current year, 183 days over the last 3 years. And you can actually go to the IRS and get the substantial presence test to see if those certain owners as a non-resident alien would qualify. You can go back and look at the instructions for Form 2553, which is the form you're going to have to file to choose your S-Corp status. So, you got to make sure that you're filing the right paperwork, make sure you meet the deadline. It's 2.5 months from either when you start your business or 2.5 months into the current calendar year. So that would be March 15th. So you're coming up on a quick deadline to make election for S-Corp status for 2025 if you've been operating, in 2024 or before. So you got to really sit down and do an analysis of whether or not S-Corp is going to save you money on taxes, or if it's going to benefit you in any way, and get a good tax preparer. Somebody that's going to be able to walk through and go through this analysis for you. And if you're an owner or operator, give us a call at 877-996-2477 or go to truckertaxtools.com, set up a free consultation when we can kind of talk about what we do, how we can help you, and some of the analysis that we go through as well. And so, these are the kind of things that you've got to kind of talk about, look at, and analyze before making a rash decision. Do I want to be an S-Corp? Do I just want to be a single member LLC, report on Schedule C? Or do I want to be just incorporated and stay as a Inc. and get taxed as a corporate entity itself and file its own taxes and pay its own taxes as well out there? So what are the pros and cons of choosing S-Corp status? Hey, that's a great thing that we should talk about right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Pros and cons. That's sometimes, when you're sitting down talking to your parents and you're trying to make a decision, they tell you to take a piece of paper and write down 2 columns, pros of doing this and cons of doing this. Is it worth doing? It's kind of what we do, as well. Pros, cons, what are the numbers? Let's run the numbers as well. So let's take a look at kind of the list of the pros and cons, and then we'll go through them. So if I'm listing down, pros of being an S-Corp or S-Corp status, as opposed to being a sole proprietorship, limited liability, potential of lower Social Security tax, potential of lower Medicare tax, pass-through status. And we'll go through this here in a little bit, each one of these things. Additional possible deductions and benefit programs that are out there. What are the cons? Administrative complexity, restrictions on shareholders and types, additional tax return that you're going to have to file, and equal distributions amongst all shareholders or partners. And we'll go through that as well. Some of these things get violated when you're running your business, when you have a lot of shareholders that are out there. So for most business owners, owner-operators, looking at S-Corp status, the lower Social Security and Medicare tax and the pass-through status is what provides the greatest benefits. So, what is the pass-through status? So if you structure your business as S-Corp, you will pay taxes, federal taxes and state taxes only on the money you earn from your business, which is recorded as personal income, and the business itself isn't taxed. So if you were a 1120 corporation, you would have corporate tax, and then the corporation pays the tax, and then you get dividends like you would get from any major corporation that's out there, and then you'd be taxed on the dividends. You have double taxation. Whereas an S-Corp just passes it through to you, and the S-Corp itself, through the Form 1120S, pays no federal taxes, and then provides each of the shareholders the Form K-1 to report on Schedule E for your share of the income from the S-Corp. Now, that doesn't include your W-2 wages and your reasonable salary. Now, where lower Social Security and Medicare tax comes in, so the advantage of an S-Corp over an unincorporated business or single member LLC reporting on Schedule C is that the owners of that unincorporated business are personally responsible for paying Social Security and Medicare taxes, collectively known as self-employment taxes, on all net earnings from the business, whereas S-Corps, who are also employees being paid that reasonable salary, taxes is only based on your compensation. So here's where we use an example. We're going to use some relatively big round numbers here. Your business makes $100,000 and you are unincorporated or a single member LLC. You get down to the bottom line of your Schedule C and it reports $100,000 of net income. You are immediately taxed 15.3% on that for Social Security and Medicare taxes. $15,300. That's the tax you're going to pay when you net $100,000 being self-employed, whether you're an owner-operator, whether you are in small business, whatever it is, that's the self-employment tax you're going to pay. And then you pay federal income tax on that $100,000 less half of Social Security and Medicare. So you're going to pay your federal income tax on basically, 93,000 some odd dollars. Now, if you were an S-Corp, and let's just say we could prove that your reasonable salary is 50,000. So you would be taxed on your reasonable wages of 50,000. Basically, the employer side and the employee side, which comes out to about 15.3%. So you're going to get taxed roughly $7,650 for those same Social Security and Medicare taxes. But you're going to save the other $7,650 because you're not paying that tax. You're paying the tax only on the reasonable wages. Now the other 50,000 comes through to your personal tax return and is subject to federal income tax as well as your W-2 wages were. Now we can structure your withholdings for federal and state taxes, if you have it applied, to come out of your W-2 wages, so you're not having to make estimated tax payments. So there's some advantages that you can play on this as well. So those are kind of things, that numbers you've got to run through and make the selection. Now, you may have a lot of depreciation, so it may not be worth making the selection that first year or the second year. Maybe it's 3 years down the road. It's something you've got to look at and decide, hey, is this going to save me enough money to go through the complexity that you've got to go through on filing an extra tax return? So let's talk about the cons. We know what the savings is going to be, roughly, depending on what your income is, because it could be much greater than that, because Social Security gets taxed to a much higher level. So if you're making 140, 150, 160, you're going to see potentially greater savings from having that S-Corp and paying that reasonable salary. But you've got to deal with the administrative complexity. So corporations, LLCs in every state, there are some tax and legal loopholes you've got to jump through for your business to remain compliant. These could be such things as a requirement for an annual board or shareholder meetings, also keeping minutes from those meetings, as well as detailed records of shareholders. You might have a little advantage there because you could actually take and have a shareholder meeting, husband and wife, and you take a trip to go through and do this. Personal part of the trip is going to be non-deductible, but the business side of the trip is going to be deductible. Special rules you got to follow to go through and do this, but there's some advantages. Now, at the federal level, there are other requirements which have an impact on how your business profits are taxed. As an S-Corp, you got to file that 2553 with the IRS. Once approved, the S-Corp status, you'll have to file at the end of every year within 2.5 months, the Form 1120S. Of course, you can file an extension and get an extension over there as well. And then let's not forget payroll. And so you're going to have taxes and forms to file as well there. Payroll tax forms, 941s are due quarterly, 940s are due annually, W-2s are due annually. Plus, you got to pay the payroll taxes as they are due, and the IRS is going to tell you how you've got to pay them as well. We tell everybody, hey, make your payroll tax deposits right after each payroll, so you don't have a huge lump sum you've got to pay quarterly or monthly, depending on how the IRS sets you up. And hey, don't forget any of these things that you're dealing with, filing late payroll tax returns, filing late forms, and all this can be very costly with the penalties the IRS can lump on you. And many business owners find much of this information very daunting. They get themselves in trouble keeping up with the paperwork involved in an S-Corp and making sure that you're in compliance, dotting the I's, crossing the T's. This is not a decision you make easy. I suggest highly that you consult with your attorney and your tax professional. And they shouldn't just carte blanche recommend that you are an S-Corp. Evaluate the benefits, the time. Is this the right path for you in your business? Is the savings going to outweigh the cost and the time it takes to be an S-Corp? Is it going to keep enough money in your pocket to be worth it? Your tax preparer and your attorneys can make money off of this. But are you keeping enough money to make this election worthwhile? If you're saving $2,000 and you've got to pay somebody to do payroll and you got to pay somebody to do tax returns, and it's going to cost you $1,500 to have all that stuff done every year, depending on where you go for your payroll services, is it worth it keeping $500 in your pocket? To me, no. To you, it might be. What's going to do the best thing for you? We're going to take a quick break. When we come back, if you're looking to start a business and choose an S-Corp status, we're going to talk a few steps to get started. And we'll do this right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. I'm going to address a couple of quick questions we got in here. One from Gary, per diems. I'm a W-2 driver. Why do I not get to deduct per diems on my taxes? This seems so unfair. Trump tax code back in 2000, I believe 17, when they revised the tax code, they took away unreimbursed employee business expenses. The company should be reimbursing you for business expenses. Many trucking companies back in 2017, 18, when we could no longer do Form 2106 to take these expenses, we worked with some of the smaller and mid-sized companies to structure pay to where they paid a per diem to the truck drivers, but lowered their W-2 wages. And so it would save you as a W-2 employee money on taxes, and you get money tax free for each night you were on the road away from home. And so we structured business to be that way so it could save you, the W-2 employee, money as well. And it does come with, consequences of, if you went to apply for a mortgage or something else, your income is lower than what you would be getting normally on a W-2 if this wasn't changed. I don't foresee that changing anytime soon. It's just working with your employer to maybe they can revise their employee plan to include, per diems over there on that side. Alex, you set up an LLC and you thought it would be effective from January. I have a client that's in this very similar situation. They set up an LLC at one point during the year, and somebody told them they could make it effective all the way back to January. Well, that doesn't happen. Your company didn't get formed until I think August, you said here, and that's when that company would take over, and you would have to file W-9s for anybody you're working for that would issue you a 1099 to get the income over there. Otherwise, if you were running as a sole proprietorship before then, that money would be taxed on a 1099 to you personally and would go on a Schedule C. No matter what you did out there, it's going to take effect the date your business actually went into effect, not after that. And you got to dot some I's, cross some T's, and make sure you're right. So we started talking about S-Corp, and we talked about setting up your corporation and everything else, and some of the steps that you're going to go through to do this. And the first one is choose your name for your business. What do you want your name to be? Moe's Trucking Company, Moe's Consulting, Jimmy's DoorDash. Whatever name you want it to be, you can be. But you got to check with your Secretary of State's office to make sure no one else has this name. If you're doing a DBA and you're going to do business as yourself, you can go down to your local office there and get an assumed name and run underneath that. But if you're going to be a LLC or a corporation, you're going to do this through the Secretary of State's office. And so you're going to go to the Secretary of State's office, check out and see whether your name's available that you're looking at. And then after that, you're going to choose your entity type, whether it's an LLC, limited liability company, corporation, which usually ends in INC or corp, LP, limited liability partnership. And then you're going to turn around and file the paperwork with the Secretary of State to establish your company. Then from there, you're going to go and get an employer identification number. This is not done through the Secretary of State's office. This is done through the IRS. A company employer identification number is like your Social Security number. So it is the taxpayer identification number for your business with the federal government. So states are going to issue their own number. The federal government's going to issue the employer identification number or taxpayer identification number by you filing the form SS4. Now, when you file that SS4, do it very carefully. Read the form. Read what the instructions say for the form as well. Because if you make a note that you're going to have payroll, the IRS will effectively make you start filing payroll tax forms immediately. Make sure you choose the right selection. Just because you select the box on there that you're going to be taxed as a S-Corp, the IRS is still going to send you this letter that says you are still taxed as an 1120 or as a single member LLC filing Schedule C or a multi-member LLC filing a 1065 until you make the election to file for the S-Corp status. So you can file the SS4, online. You can print the form out, fax it in, and you can go to irs.gov and search SS4, and you can get the application for the employer identification number. Again, that form is SS4. Be careful how you fill it out. And then make sure you read the letter the IRS sends you when they send you that letter saying your S-Corp status has been approved or your employer identification number has been approved, and they sign that employer identification number. Then follow the instructions. When you go to get your taxes done, if you have a new EIN, give that to the tax preparer so that they know how you're supposed to file. Then, if you have gone through the process and evaluated whether S-Corp status is the right for you, your company has been registered, you received your EIN, then make the election to become an S-Corp with the IRS. And since this is a designation from the IRS, it's not automatic. So again, within that 2 months, 15 days, you got to complete the form 2553. And then in the instructions, it tells you exactly the right location to send this form in or the fax number to fax this in. The IRS should be responding to you with an acceptance letter and when that S-Corp status will take effect. So, make sure that you're looking at these things, you're dotting your I's, you're crossing your T's, and you have the right information to process the returns in the right way. Hey, one of the worst things you can do is to set up this corporation and think that, hey, because I set this up with the state, I'm now an S-Corp. Or, hey, because I set this up with the state, I didn't need an employer identification number. Or I set this up with the state, I got an employer identification number, and I checked the box that I wanted to be an S-Corp, and I think I'm an S-Corp, but the IRS came back and said, no, you got to file 1120, which means that entity is taxed as a corporation, and then you get taxed when you receive money to yourself. Or I didn't follow through all the processes that it takes to make this corporation that you now have, LLC, Inc., whatever, to become effective. I didn't put payroll in the company name. I have payroll in my DBA name still. I never changed with everybody that I'm working for. I didn't give them a new W-9 to have the income, instead of coming to me through my DBA or me personally, to go to my LLC or my Inc. I didn't make the changes that I needed to make or do the payroll tax forms. See, all these things come with consequences. So we had a company that came to us and have been having their tax prepared for the last 3-4 years from somebody else, but they never asked the questions. They never got the employer EIN letter to see how this company should have been taxed all along. And then they find out for the last 3 years, you should have had payroll tax forms. For the last 3 years, you should have been filing an 1120S. Or for the last 3 years, you should have been filing a partnership return. Consequences, penalties, interest accrue and continue to accrue daily, weekly, monthly. It becomes a nightmare, and we've got to go through and fight it. And that's when you need taxation solutions to come in and help find a solution to the problem. Maybe get the IRS to waive it, or maybe we find a way that, hey, yes, you should have been an 1120S or a partnership, and we go back and file those partnership returns, and we reduce the tax liability on the personal side, which more than offsets the penalties you have on the personal side. And then we go back and fight the penalties that they levied against you as a partnership, because ignorance is bliss sometimes, and the tax preparer that you hired didn't follow through with what you gave them to do. Little things we can do to help solve that problem. But if you got that problem, you call Taxation Solutions at 888-930-1016. Again, 888-930-1016, and get a solution to that problem and get tax relief for that problem today. And hey, if you mentioned that you heard it at Tax Talk For You, and you subscribe over at taxtalkforyou.com, and you subscribe for free, but make sure you never miss an episode. They'll give you 20% off any tax solutions that we're putting through. If you need tax analysis because you owe money to the IRS and we got to find out why, special 50% off discount for you there as well. So go to taxationsolutions.net. Again, taxationsolutions.net. And that phone number for that free consultation is 888-930-1016. Hey, good news is, if you subscribe at taxtalkforyou.com, you get some discounts. You stay abreast of everything that's happening out there for taxes. Things like S-Corp status, partnerships, LLPs, limited liability companies, tax planning, bookkeeping, you name it, we have it for you. But hey, stay in touch with us. If you have questions, email us. Go through taxtalkforyou.com. Shoot us a message over there. You can see us every Monday, 10 a.m., right here on W4CY Radio, taxtalk4u.com, or Talk4TV. You can see us every Monday at 10 a.m. right here. Come back next week. We're going to have more great information for you right here at taxtalk4u.com, 10 a.m. Monday. See you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.